What if I told you that the greatest investor of our time wasn't Warren Buffett, not George Soros, not even Ray Dalio? No, this man didn't spend his days studying balance sheets, he didn't chase hot stocks, and he wasn't obsessed with corporate earnings. Instead, he was a mathematician, a codebreaker, a man whose brilliance lay in deciphering the world's most complex puzzles. And yet, this unlikely genius built the most successful hedge fund in history. His name was Jim Simons. But Jim Simons didn't start out as a Wall Street tycoon. In fact, he had no interest in finance at all. He was a dreamer, a wanderer, someone obsessed with solving problems. As a child, he would stare at the ceiling for hours, running through numbers in his head, searching for hidden patterns. Numbers weren't just numbers to him. They were clues to something bigger, something waiting to be discovered. At 14, he took a job at a local store sweeping floors. He was so absent-minded, so lost in his own world of equations, that his boss demoted him from stock boy to janitor. By the time he was 23, he had earned a PhD in mathematics, but he wasn't interested in playing it safe. No, Jim Simons craved something more, something bigger. And before he ever touched the stock market, he had already worked on one of the most secretive projects of his time, breaking Cold War codes for the US government. At the height of the Cold War, Simons wasn't on Wall Street. He was in a high-security government facility, decoding enemy messages, uncovering patterns in what seemed like pure chaos. It was here that he sharpened the skill that would later make him the greatest investor the world has ever seen. In 1982, Simons did something radical. He walked away from academia, from government work, and set out to prove a theory that would change finance forever. He wasn't going to trade like Warren Buffett. He wasn't going to predict the economy like George Soros. Instead, he was going to treat the stock market like a puzzle that could be solved with nothing more than math and data. People laughed at him. Wall Street scoffed. "You can't trade stocks with computers," they said. "Markets are too unpredictable." But Jim, he knew better. He knew that even in randomness, there is order. And then, the profits started rolling in. Quietly, behind closed doors, Jim Simons had cracked the code of the stock market. And by the time the world realized what he had done, it was already too late. Act 1. The Unlikely Genius. Born in 1938, Jim Simons was no Wall Street prodigy. He wasn't a finance major, he didn't study business, and he had no formal training in economics. Instead, he was obsessed with something else entirely: patterns, numbers, mathematical beauty hidden in chaos. Where others saw randomness, Simons saw order. Where others saw noise, he saw signals. While other kids were playing baseball or dreaming of being astronauts, young Jim was obsessed with numbers. At just 4 years old, he'd sit in his room, doubling numbers in his head until they reached the thousands. He didn't know why. He just knew that numbers made sense in a way the world around him didn't. By the time he was in high school, Jim wasn't just good at math, he was brilliant. He could see solutions before problems were even fully written out. But more importantly, he had an unshakable belief: there was always an answer, always a pattern to be found. At MIT, Simons immersed himself in mathematics, devouring books on geometry, topology, and differential equations. While most students struggled to keep up, Simons was already a step ahead. He didn't just learn equations, he felt them. He saw numbers not as cold, lifeless figures, but as living, breathing puzzles waiting to be unlocked. But here's the thing about Jim Simons: he never accepted limits. When a professor told him a problem was unsolvable, it only made him work harder. By the time he was 23, he had a PhD in mathematics. A rising star. A thinker unlike any other. But solving problems in a classroom wasn't enough. Simons wasn't just smart, he was restless. He needed bigger challenges. He wanted to crack something truly impossible. And that's when the US government came calling. At the height of the Cold War, America needed its best minds to break enemy codes. And Jim Simons? He was one of the best. He was recruited as a top codebreaker for the Institute for Defense Analysis, working to uncover patterns in encrypted Soviet messages. The work was demanding. Soviet ciphers were some of the most complex in the world. But Simons had a gift, a way of spotting sequences no one else could. He saw through randomness, slicing through chaos like a blade through silk. And one day he cracked something big. His breakthroughs helped change the course of intelligence gathering. The government trusted him, respected him. Some even called him a genius. But there was just one problem. He was bored. Jim didn't care about politics. He didn't care about espionage. He cared about solving the hardest problems in the world. And soon he realized the biggest puzzle of them all wasn't hidden in enemy codes. No one had ever solved the stock market before. It was a chaotic, emotion-driven mess. A world ruled by instincts, by traders yelling into phones, by people making gut decisions based on fear and greed. It was in every way the opposite of mathematics. But what if they were wrong? What if the stock market wasn't chaos at all? What if there were patterns hidden beneath the noise, buried in the numbers, waiting to be discovered? What if the market could be cracked just like an enemy cipher? Jim Simons had spent years finding patterns where others saw randomness. He had cracked unbreakable codes. Now he was about to take that same brilliance, that same obsession, and turn it toward the one place no mathematician had ever conquered before, Wall Street. And what happened next? Well, it would change the world of investing forever. Act 2. The Renaissance begins. A dimly lit lab. Chalk-covered notebooks, crumpled papers with scribbled equations, and a half-empty cup of cold coffee. The sound of fingers clacking on a keyboard echoes through the room. Simons wasn't a trader. He knew almost nothing about investing. He had never stepped foot onto a Wall Street trading floor, never studied finance, and never read an earnings report. But he had something that no one else did. A radical idea. What if you could predict the stock market not through instincts, not through gut feeling, but with pure math? What if, beneath the panic, the hype, the randomness of human emotions, there was a pattern, a hidden order waiting to be uncovered? Everyone said it was impossible. The stock market was too unpredictable, they claimed, too chaotic. But Jim Simons had spent his entire life proving people wrong. So, in 1982, he did something no one had ever done before. He launched Renaissance Technologies, not a hedge fund filled with Wall Street veterans, but a laboratory of pure mathematical discovery. Instead of hiring traders, Simons assembled a dream team: mathematicians, physicists, computer scientists, even linguists. People with no experience in finance, but who had something far more valuable: the ability to find patterns in data. To them, the market wasn't a place of chaos. It was a vast ocean of hidden signals. Tiny, imperceptible movements that, if analyzed correctly, could predict the future. They built algorithms, hundreds, then thousands, searching for the tiniest inefficiencies in stock prices. They didn't care why a stock moved. They only cared that it moved. And if they could predict it, even by a fraction of a percent, they could make money. And then the impossible happened. It worked. Renaissance Technologies cracked the code of the markets, turning every tiny price movement into a profit. By the late 1980s, the numbers were undeniable. Renaissance's flagship fund, Medallion, was making money at an unheard-of rate. While the best hedge funds on Wall Street were happy with 15% annual returns, Simons' fund was doing double, even triple that. But what made Medallion truly extraordinary was its consistency. The market could crash, recessions could hit, global economies could collapse. And yet, Medallion kept making money. It was unstoppable. Black Monday. 1987. Traders in a frenzy, markets plummeting. While the rest of the world lost fortunes, Renaissance Technologies kept making billions, and no one could figure out how. Simons had done something unheard of. He removed human emotion from trading. While Wall Street was still making decisions based on earnings reports and news headlines, Medallion was running on pure logic. No instincts, no fear. just math. It was like bringing a nuclear weapon to a knife fight. Medallion was only for his people. His mathematicians, his scientists, his codebreakers. To this day, Medallion remains one of the most exclusive and secretive financial operations in history. No one outside of Renaissance technologies truly knows how it works. A hedge fund so powerful, so secretive, that it left Wall Street in awe. It was a black box of pure profit, a money machine running on mathematics, data, and algorithms, so advanced that even the brightest minds on Wall Street could barely comprehend how it worked. Let's put that in perspective. The legendary Warren Buffett, about 20% per year. George Soros, one of the greatest traders ever. He made half as much. The Medallion Fund was in a league of its own. It was too good to be true. And yet, it was real. The numbers didn't lie. While the rest of the world's top investors were fighting for single-digit gains, Medallion was compounding at an unfathomable rate. Over time, Medallion pulled in over $100 billion in total profits. More than Apple, Amazon, or Google made in their early years. It became the most successful fund in the history of finance. But here's where things get interesting. Unlike every other hedge fund, where billionaires and institutions rushed to invest, Medallion had one rule. Medallion was off-limits. Only Renaissance's own employees could invest. Because he didn't need their money. Medallion was already making so much, so consistently, that it didn't make sense to share it. For those lucky enough to work at Renaissance, Medallion was more than just an investment. It was a golden ticket, a guarantee of unimaginable wealth. Year after year, crisis after crisis, Medallion just kept printing money. It survived stock market crashes, recessions, even the 2008 financial meltdown, while everyone else was losing billions. To this day, no one outside of Renaissance technologies truly understands how Medallion operates. Traders have spent decades trying to reverse engineer its strategies. None have succeeded. Wall Street's best and brightest had spent their lives studying earnings reports, analyzing company fundamentals, and making million-dollar bets based on gut feelings. Jim Simons and his team, they didn't care about any of that. They had built a financial machine that was smarter, faster, and more precise than any human. Act 3. The legacy and the controversies. Jim Simons' success wasn't just about money. He changed the way the entire financial world operates. Today, over 30% of market trading is controlled by algorithms. Inspired by his approach, he created an entire revolution, one where cold, hard data replaced human intuition. One where numbers, patterns, and algorithms became the new kings of Wall Street. But with great power comes unintended consequences. The very algorithms designed to create stability sometimes do the opposite. Flash crashes, unexplained volatility, and entire markets melting down in seconds. These are the side effects of a world run by machines. And yet, that wasn't even the most controversial impact of Jim Simons' legacy. Robert Mercer, a brilliant but reclusive computer scientist, had helped Renaissance build its money-making empire. But Mercer wasn't just interested in finance. He had other ambitions. At first, no one paid much attention. But then millions of dollars started flowing out of Renaissance, not into financial markets, but into political warfare. Mercer became one of the biggest financial backers of Donald Trump's presidential campaign. And his money changed everything. From the US election to Brexit, Renaissance's money made from Simons' algorithms, was now reshaping the global order. Suddenly, Renaissance Technologies wasn't just a financial powerhouse. It had become a political weapon. And that made people uneasy, including Jim Simons himself. Simons had spent his life staying out of politics. He was a numbers man, a scientist. But now his creation, his brainchild, was fueling one of the most divisive elections in modern history. So, in a rare move, Simons fought back. But the damage was done. In his later years, Simons gave away much of his fortune, not to politicians, but to science, medicine, and education. While his hedge fund changed finance, Simons himself remained a mathematician at heart, a man who believed that numbers held the key to understanding the universe. So what's the lesson here? The stock market isn't just about finance. It's about patterns, about math, about decoding the hidden signals that others overlook. And the truth is, the world runs on patterns. Nature has them. Human behavior has them. Even chaos itself follows hidden rules. And when you understand the rules, you see the future before everyone else. The world is full of noise, but underneath it, there's always a pattern. So the question isn't just about investing. The question is, what hidden signals are you missing? Because whether it's stocks, science, or history itself, the future belongs to those who can see what no one else sees. If you found this story fascinating, hit that like button, subscribe, and stay tuned.